The Non-Banking Financial Institutions Regulatory Authority, NBFIRA, they have recently introduced the stricter regulations which are governing pension fund investments. So these reforms are aimed to strengthen transparency, to also strengthen accountability. This is as regards the management of pension funds, to ensure that there's better protection for retirees' savings. So this move reflects the growing importance of these regulatory frameworks that we see put in place, and safeguarding of financial stability, promoting of responsible investment practices. This is in the non-banking sector. So we're going to get into that and to explore this a little bit further, and the new developments therein, and how it will affect pension fund administrators as well as the contributors, perhaps even the broader financial market in Botswana. So we are going to be joined here being joined here in studio by the Deputy Director for Retirement Fund, Mr. Phineas Sinyi. He is together with Retirement Funds Analyst, Mr. Kutlwano Otlotleng, both from NBFIRA. Let me take this moment and welcome both of you. A very good morning to you. Thank you for your time, for coming through this morning.
Thank you very much, One.
Right.
Thank you very much, One.
The Non-Banking Financial Institutions Regulatory Authority.
Yes.
I'm saying it correctly.
Yes, NBFIRA.
Let's just quickly introduce what your core mandate is.
Okay.
Right.
Thank you very much, One. First of all, let me thank you for inviting us here, and greet all your viewers,
right,
anywhere they are. NBFIRA stands for the Non-Bank Financial Institutions Regulatory Authority. Yes. Which is mandated to supervise and regulate the non-bank financial sector.
Right.
That is beside banks, which are regulated by Bank of Botswana.
Yes. Non-bank, maybe if we give examples so that one can form a clearer picture.
Yes, I will explain that.
Yeah.
We overlook the insurance sectors. We overlook the micro-lending space. We overlook the capital markets. Capital markets go on go stock exchange and other unlisted investments. And then we also have the retirement fund sector. So the gentleman here and myself, right, we come from that department here, the retirement funds.
Right.
Yes. Yes, you are definitely right. Non-bank.
Non-bank.
Yes, financial institutions.
We're going to come and introduce perhaps what in your mandate as a regulator you do. Do you set operation procedures, or what is it that you're charged with ensuring? As NBFIRA, just quickly as these introductory.
Yeah, just as introductory.
Yes.
So we are charged with two main functions. Right. The first function is to supervise, that is to overlook and ensure that there's compliance. Yeah. The second function is to actually come up with those laws, the rules that we are going to be talking about, of governing the operation of the sectors that we overlook. Yes.
Okay, I think that suffices. So when I talk about when it comes to retirement funds, this function, you're also you are an oversight over retirement funds. So what are you guided by when it comes to pensions?
What is actually mandating us is the law,
yes,
an act of parliament. We have the Retirement Fund Act. Over it, we have the NBFIRA Act. The NBFIRA Act actually establishes the NBFIRA itself, the entity that we come from, and actually outlines our mandate, our function. Then we have what we call subsidiary legislations. Those are sector-based. For example, in our case, we have the Retirement Fund Act, which is actually looking at the Retirement Fund Act. We have the Insurance Industry Act, which is actually looking after the insurance sector. And then we have the Securities Act, which is actually governing the capital markets.
Okay.
Yes.
Let me bring you in here, Kutlwana. So we'll delve now into retirement and the retirement fund and the act therein and the regulation and the alterations that or improvements that we're talking about. A retirement fund, pension fund. Superannuation. What is the difference? Can you just define the two?
Yes, I thank you, Honor, for giving me an opportunity and for having us here. Allow me to also follow suit and greet the viewers back at home. I think we have to recognize that in our setting, we have this thing called retirement fund. And under it, we have two main types of retirement funds, right? We have this one that is called pension fund, right? Pension fund is the most popular one. You would contribute, the employer and the employee would contribute throughout the working life of the employee.
Right.
And then ultimately at retirement, the employee would take a portion as a cash lump sum, and they would earn a monthly annuity on the remaining balance.
That's retirement fund.
That is a pension fund.
Oh, that's pension
Yes.
fund. Also under retirement
And
fund.
it's a form of a type
yes.
of a retirement fund. And then secondly, we would have what you call a provident fund. Similarly, the contribution structure is the same. The employee and the employer would contribute into the fund throughout the working life of the employer, if it's in the case of the employee. And then at retirement, the main difference is that the entire, whatever is in the pot, is commuted to the member in our provident fund. So, provident fund at retirement, you take everything that was in the pot.
Yes.
While on the other hand, pension, you take part as cash, and then whatever remains,
Let's just quickly go into that as brief as you possibly can, given the sophistication of the subject. Just how does pension work in Botswana? Is that a simple enough question to answer, or is it too sophisticated to have in 2 minutes?
Yeah, maybe it will be a bit sophisticated, but we can try to illustrate for better understanding.
Yes.
Like he was mentioning, we have provident and pension funds. Collectively, we just call them retirement funds.
Yeah.
So, which means any arrangement that is meant
Yeah.
for the purpose of a retirement benefit.
Yeah. It crystallizes providence
Yes.
in that you get your little nest egg.
Yes.
Once off.
Yes.
But then pension?
Pension is you save, and upon retirement you get part of your money as lump sum cash, and then you have to buy an annuity, which is a pension that you are going to be paid on a monthly basis, a salary that is going to take care of you for the rest of your life.
For the rest of your
Yes.
life, and then upon death?
As upon death,
Just stops.
no, upon death,
Yeah.
there are quite different facilities.
Death benefits, yeah.
Yes, if you are still within, we have a guarantee period. If you die within a certain period of time, then there are some money that will be paid to your beneficiaries as cash. If you pass on after a certain period, then there is really nothing to.
Then it's over.
It's over. It's a risk that the insurance company has undertaken.
What sort of time period are we talking about? 10, 20 years, 15?
Yes,
That,
we have
yeah.
introduced one rule with the pension benefits, which actually now has come into place in December. And in it we are saying that 5 years, it should be a minimum guarantee. Yes.
Okay.
That means it will pass within 5 years. After you've bought it, then there's some benefit that will be paid off.
Interesting.
Yes.
Okay, so we how many organizations or entities do we have in Botswana that are registered, I suppose, with yourselves as pension funds? Or
Yes,
do we have different types? Because from our ordinary citizen observation, you'll have some that are like umbrella, and some that are operating like standalones. If you just give us a picture of the broadness of the spectrum of these entities.
Okay. NBFIRA as a supervisory authority has up to 800 entities under it.
Okay.
In the retirement fund department, we overlook 90 or 93 entities, that is financial institutions. And pension funds, we have 83 pension funds. You are talking about the umbrellas. Yeah, that's another terminology and a standalone, but
Right.
an umbrella can be a pension fund, like you were saying, or a provident fund. It depends. So it depends on the objective, whether upon retirement you want to take all your money or you want to be on a monthly salary. But not taking your money not to use it, otherwise it has to be for the purpose of taking care of you.
These technicalities we have been hearing, these changes, these improvements. You want to weigh in on this one? Just a picture of just how many entities we have operating this function of retirement benefits.
Yes, we have about approximately 85 types of retirement funds, and we have about 6 fund administrators. You'd know that maybe we should introduce, because you just mentioned it, we'd have this company playing a very critical role called a fund administrator. As the name is self-explanatory, the main role of the fund administrator is to administrate the fund. By way of keeping books, you'd realize that that is where most of our members would be going if they want to when they are processing their retirement. So we have about 6 of those companies. But in terms of retirement funds, we have about 85 retirement funds in total at the moment.
Okay, so let's get into the legislation, the legal framework that is guiding or governing you. We have the Retirement Fund Act of 2022. Yes. From then and then up till today, what is happening? What has been the movement right up to these latest developments that we are here to introduce to our audiences?
Yes. Thank you very much, Honor, once again. There have been quite a number of developments since 2022. Yeah. The first development was to the Parliament to pass the Retirement Fund Act of 2022.
Right.
Yeah. Following that, there was a lot of groundwork that has to be done. We have recently issued what we call administrative rules. Administrative rules are the ones that actually operationalize the Act. And this one that we are here for today is the Investment Fund Rules, which was issued in 2023. That is after the Primary Act was issued. Yeah, so there's been a lot of development. Last year we issued a number of about 8 administrative rules. Yeah. Yeah, including a rule that talks about member rights. As a member, what are you supposed to be given, and what are the expectations from your service provider and the pension fund? Okay.
Just briefly mention some of these administrative rules, because I suppose this is what governs the operations of whoever this entity is that is charged with whoever's pension. Administrative rules. Any that you can perhaps give as example?
Yeah,
well, to both of you, actually.
Yeah, this one we are here for is called Pension Fund Prudential Rule number 2.
Okay.
So this is the one that is specifically talking to investments. So
it's one of the administration
rules. It regulates
rules?
Investment that pension funds make. So it will say what type of investment you can make and what are the limits that you are, because it is a regulation. Yes. It is actually limiting them.
Let me give you this opportunity to introduce it. What is it saying and what is it doing?
What it actually says, it actually outlines to say, let me give an example. It says you cannot have your assets in cash, really more than 60% of your total assets.
Okay.
So that is.
So upon retirement, the latest development is that you may not have more than 60% in cash. In lump sum, is that what you say?
Not as an individual. We're talking at a fund level. Yeah, as an individual, upon retirement, your money must be in cash. You have to be paid over.
Yes.
So we have all your money. Let me say, during your saving, when you upon becoming a member, you start to save. You start to contribute until you reach the retirement age. During that accumulation phase, we call it an accumulation phase, your money will be put in cash, to be put in shares, to be put overseas to earn investment returns. Right. But then upon retirement, that money, even if it was a shares, those shares actually have to be liquidated to convert it to cash. Then we have to pay you cash.
Right.
Yes, we have to pay you in cash.
Okay. Let's come back to this latest development then, what it's pronouncing.
The key changes from 2022 from the Act itself was to increase overally the domestic investment of pension funds in Botswana. So the policy that we had before was requiring pension funds to invest a minimum of 30%
locally
in Botswana. Yes. So the 2022 Act now requires that a minimum of 50%, which means you are balancing your portfolio. So that means the other 50 will be offshore. So offshore we mean outside the borders of Botswana. So South Africa is still offshore. So those are the key changes to increase the limit. The changes also imply that we have what we call a transitional period. It cannot be done overnight to balance the portfolio to 50-50. So we have a 5-year transitional period which ends in 2025.
Okay.
Yes.
This is the 2023.
This is one of the key changes.
From 2023.
The other key changes that are there, the second one that I can mention is the one that was aligning our laws, because we are also part of the global world.
Yeah.
So that means we have to align our standards of doing business with other international standards. So it was relating to issues of climate change. We incorporated issues like ESG.
Environmental, social, and governance. Yes.
Yeah.
Okay.
Those are very important issues, because what we are saying in that, the message is that for you to invest pension fund money, you are not only looking for a financial return. You should also look at other non-financial factors like social impact.
Yeah.
Yeah. So what is the social impact that you are making? Not necessarily to say, okay, I'll get so much financial return at the end of the day. So the other changes that I need to mention is to say, because we changed from 30% to 50%, we knew that quite a lot of money will be coming onshore. So we have introduced new asset classes. We have introduced infrastructure class so that it can actually observe.
I want to give it to you to perhaps bring in Kutlwano on this one. Perhaps you could go into that, because when you mentioned the increase of the limit from 30 to 50 for local investment, I found myself wondering, well, what are the potentials for the investment avenues locally? Let me give you this opportunity, perhaps.
Yes, thank you once again. I think one thing, when this decision was made, we do recognize that there's a possibility that there are limited investment opportunities, most productive investment opportunities are available locally. So one of our responses was to introduce a new asset class in infrastructure funds in order to provide more opportunities for absorption of these funds as they are repatriated back from offshore to onshore.
What does that mean? That pension funds can invest in infrastructure development? Is that what it means? Or what does that mean?
Yes, but through an arrangement called a local infrastructure fund. A fund would need to be set up with a sole mandate of investing in local infrastructure. Then that fund would raise funds from pension funds and undertake infrastructure products in Botswana. And it would obviously contribute to infrastructure development. And the other one one of the responses that we did, we have an asset class. Maybe let me just quickly mention that the pension investment rule, right, prescribes asset classes that pension funds may invest in, together with limits, investment limits. So one would say it's an overarching investment limit and type of asset class guideline. So it provides an overarching guidance in terms of how pension funds are allocated and invested. So we have another asset class called private equity funds. We also increased the limits on private equity from 5 to 10%, with a view of increasing the opportunities that would be available to absorb pension funds as they are repatriated from offshore to onshore.
Well, it makes sense. It all sounds like a valuable improvement. But you do this alone. Who are the other stakeholders? I mean, who is the stakeholder in the retirement fund ecosystem? And what is their feedback on this latest development?
Okay. We have a number of stakeholders.
Yeah.
Firstly is the pension fund themselves. And we have the fund administrators who are also service providers to pension fund who provide administration services. We have investment managers. Sometimes they're called asset managers who actually deploy the funds. We have assets consultants. Assets consultants, they advise you as a pension fund with your membership where you can put your money based on certain factors that they're looking at, among others being your age profile of your membership. Yes.
Okay, so then what is their feedback?
The feedback, I think maybe...
I think right down to the contributor.
I think let's also take the other side. Yes, we consult when we do these laws. We get feedback. And as NBFIRA, I'll tell you that we have the open door policy. We always receive feedback. And I would mention that outright that these laws are not cast in stone. Laws can always be changed. We always do stakeholder analysis, stakeholder engagements, and we always receive feedback. And anytime a law can be reviewed. If we talk about this investment rule, it has been reviewed quite a number of times because of stakeholder feedback, etc. It was first introduced in 2012. It was reviewed in 2017. It was also reviewed in 2023, as we speak right now. So it's a dynamic, it's forward-looking investment rule.
Let me just ask this then. These reviews and what they have brought is in effect as we speak, or effects when?
No. This has been effecting like I'm
since
saying.
2012.
2012 there was another review we amended. 2017 there was another review. We amended.
This latest one that you're mentioning on the investment rules is in effect.
Yes, it's in effect since June 2023.
Let me ask you to, because unfortunately our time is running out. So all this investment speak, this pension fund speak, and all the details that you have gone into to elaborate exactly what your operations entail. Then when it comes down to the contributor, Botswana, the person, all this benefits them how? What is the greater value then that all this development brings to the pensioners?
Yeah, the overall benefit is for a member, the pension fund, is their obligation is to contribute usually on a monthly basis into this pot to save, and the overall benefit is that upon following investment returns, upon retirement, you collect more money than you actually have put in. Yes, then you retire from work. Yeah, if that is the case.
Okay. Yes. Because we're closing, let me also give you an opportunity to weigh in on this underlying question. Bottom line is then, what benefit does all this bring to the member of a pension fund?
The main goal of pension funds will always remain to create long-term value for its members. And I think as NBFIRA, that is why we exist, to ensure member protection, and the laws are crafted in that manner, including this pension investment rule.
Okay, so unfortunately, this is all the time we have for this discussion. I'm going to have to close it off here. But then, is this something that all your stakeholders are comfortable with, that members can go straight to their pension fund for any further inquiry, or would you direct them to yourselves as NBFIRA for a better understanding of just what development is going on here?
Yeah, let's make this point to say, your first call as a member, your first call, your first stop should be your pension fund.
Right.
Yes. And you can approach us as NBFIRA, because I said our door is always open, following your engagement. And you must have a written feedback that you will show us that you have engaged your pension fund.
Right.
So your first call is your pension fund. Secondly, you have to consult your pension fund will actually refer you to your fund administrator for further services.
Okay.
It's only after you've exhausted those, then you can approach us.
Then you come to NBFIRA.
Yeah.
Your closing remark.
I think I can just close by saying the role and its performance will continue to be monitored, and we are keeping up to track with its impact, both on the funds at a larger level and on the returns. So I can just assure everyone, including the members of pension funds, that the role is being monitored, and we will respond accordingly and make recommendations as and when necessary to the powers that be.
Let me thank you both for coming through. Unfortunately, we have exhausted the time, actually gone beyond exhausting the time to understand this very important subject. Thank you both for coming through.
Thank you
Okay.
for having me.